Hey folks, Dan Frio here with your real estate news for July 18th, 2025. So far today, mortgage rates are easing a little bit. We have the 30-year fix down 0.01%. Really nothing to write home about. But there's really no economic news out today. And if you're watching this video, you're trying to figure out what's going on with those things over there and the whys behind it because you're looking to buy or refinance, right? Well, let's get over to what economic news we have for today that I want to share with you guys. Inflation outlook tumbles to pre-tariff levels in the latest University of Michigan survey. They're coming out saying the inflation level's looking pretty darn good, folks. It's actually back to where we used to be. So is that going to force the Federal Reserve to cut rates? Well, we're going to check on that here in a second. But the news that we have out today, or the lack of news we have out today, is really pushing the Cinderella story off the charts today, because right now we have the indices in the complete red across the board. We have the VIX up. That's not good news. We go over to cryptocurrency and it's down. And we also have oil up, or oil's down. So we have one piece of this equation actually working out for us today. So what's actually going on behind the markets moves today? Well, let's get over to it, folks. My name is Dan Frio, and I do this report twice a day to inform you guys what the heck's going on with those and the whys behind it. And folks, the reason why I do this is I'm actually a federally licensed mortgage loan officer. And what that means to you is I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you if you're looking to buy or refinance. We have a slogan. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Give you all that at the end of this video. You're here for these. So let's get to it. Okay, so we have some breaking news right now. We know housing affordability is the number one culprit of what America's facing right now. I want to take it over to right now to CNBC. They have an interview with a young man that was actually a part of the Obama administration, and he's actually given kudos to the new tax bill. Why? Well, let's check it out. See what you think about this. Let's take it over to it, CNBC.
To improve the housing affordability crisis in the city, but the methodology is up for debate. Someone who knows a lot about this here now, Sean Donovan, CEO of Enterprise Community Partners, a nonprofit aimed at increasing housing supply and advancing equity. He also served as HUD secretary under President Obama, I knew him then, and the commissioner of the New York City Department of Housing and Preservation and Development. I didn't realize you did that prior to being HUD secretary, 2009 to 2014. Welcome, Sean. It's Mr. I still should call you that, I guess, Mr. Secretary.
Sean is just great.
Sean
Thank you.
Good.
It's great to be back. Good to see you.
It's tough. Housing affordability, housing supply. I'm not going to say that, wow, you've had 16 years of being intimately involved and we're no better off. It's not your fault. You're still plugging away, are you not?
We absolutely are. But the problem is, and I think that's true of this election in New York. We call it an affordability election. It was a housing election. I think it's true of our election. Donald Trump was elected because we had an inflation problem. That was a housing problem. Our inflation problem was a housing problem the last few years. And so this is a problem that is driving elections. I would even argue it's the number one issue, housing affordability in America.
And then you take Manhattan.
So again, he was with the Obama administration. They're going to get to into a second is the new tax bill that just passed, and I didn't even realize the extent of this. I want you to focus in on that. And they talk about Manhattan and New York a little bit through here. But this young man was part of the administration for 16 years, and it was basically a blunt question. You've been there for 16 years, and it's no better off. So what's really going on? So let's see how maybe the tax bill might help this out.
There's no solution to affordable housing.
Well, here's what's interesting is we're now seeing bipartisan, at a time of hyperpartisanship, we are seeing more and more bipartisanship around building more housing. We are 7 million units short in housing in this country, and places are starting to build more. You even saw California recently say they're going to wipe out the Environmental Quality Act if you're building affordable housing. So that is starting to make a real difference. Prices are coming down in places that are building more housing. And that's what we need to do here in New York and across the country.
Well, I want you to tell me what Enterprise, because you work in 3 different areas, I know, but is this low-income housing tax credit program key in your view?
Absolutely. And in fact, one of the things we don't talk enough about in the bill that just went through Congress, the reconciliation bill, the one big beautiful bill, as people call it, there was the biggest increase we've ever seen in the low-income housing tax credit.
Democrats never say that.
Well,
That's a good. So it was a good thing. You're happy about that.
On housing, it was a really important step, and it was highly bipartisan. And here's the thing.
How was it bipartisan when they didn't get a single Democrat vote?
Well, there were a few other things in the bill you might have noticed that weren't so popular.
I understand, but
So that's one piece of the puzzle that doesn't really get out to the public much, and it doesn't really get posted in mainstream media as well. But here at the channel, we want to provide you all the information. No, I'm not pure Trump, but a lot of the tax bills are helping a lot of us people, normal folks. Okay, so I'll leave it at that, folks, right over through there. So now let's get over to the inflation report. So the University of Michigan came out, and they said consumer inflation rose 1.8%. So that's below the 2% that they were focusing in on. But the reason for the markets, I won't say crash today, or in the red, right through here. President Trump's pushing for 20% minimum tariffs on the EU. Actually, I think it's about 15% he's pushing. They want to be at 10. So there's a little bit of back and forth, but there are negotiations going on there. One of the reasons why we're talking about all this right now is the Federal Reserve's meeting in 11 days. We're trying to figure out, is there any news next week coming in that might affect these? And I hate to say it, there's really not enough data coming in that's going to really skew the markets in the Federal Reserve at the next meeting. We had inflation numbers. They all came in, other than one out of six reports came in with higher inflation numbers, and that's the one that makes the mainstream media. So you have inflation coming in check in a lot of these areas. You have the markets earnings reports for a lot of companies, very good. You have incomes for people still going up, exceeding inflation. So overall, the economy is looking pretty good. Then we also had the unemployment numbers come in. They were actually better than expected as well. So overall, the economy is looking pretty darn good, but it's still these tariffs that are causing confusion and concerns in the markets. But in 11 days, the Federal Reserve is going to come out and tell us what they're going to do. What are they going to do? They're going to do nothing. So let's get over to the reports that we're having next week that might sway them one way or another, but I don't think they're going to go into what they call the black box or something like that, where they can't talk leading up to the meeting that they're coming up to in 11 days. So let's see what data is coming out next week that might sway their decision one way or another, and there's really nothing out there, folks. So nothing on Monday. On Tuesday, we have really nothing coming out as well. On Wednesday, we have existing home sales. That's it for that day. Thursday, we will have continued jobless claims and initial jobless claims. We get those every week. We'll start to see if there's some concerns in that pocket of the jobs market, but so far, so good. And then on Friday, we're going to get durable goods orders and the Atlanta Fed's second quarter GDP numbers. They're expecting it to stay at the steady 2.4. We'll see how those go for the week next week. But none of this data should really shock in all the markets. So the Federal Reserve, what are they going to do next meeting? Well, let's go down through here and check the probabilities of this. If you go down through here, there is a 95. Well, we should just make this 100%. There is two defectors of the Federal Reserve that really wants to cut rates, but overall, the Federal Reserve's not going to cut rates at the next meetings. There's a 95% chance of them not cutting. But then at the September meeting, there's over almost a 60% chance they're going to cut. So expectations they're going to cut in September. Many analysts have 2 cuts in the cards, 3 cuts possibly. We're going to we only have really 3 meetings left in the year after the July meeting. So if they cut at the next 2 or 3 meetings, it's basically they're going to cut throughout the rest of the year. So where's that going to push rates eventually? Well, let's get over to some long-term or midterm, long-term, and short-term expectations. So let's get over to the bond market we're seeing right now. The bond market, or the MBS market right now, is up 12 ticks. That's what's causing mortgage rates to ease just a little bit right through here. But what we're going to probably notice over the next week or leading up to the Federal Reserve, unless there's any all the markets are going to be completely dependent on the tariff news, because we have inflation. Inflation's pretty much coming into check on where the Fed wants it. The unknown is tariffs. Unemployment, or the employment numbers, same thing. The culprit there is why there's no certainty, the tariffs. So all the data that's coming into from here on out until tariffs get settled, the markets are going to be volatile. But there's really nothing that's taking place over the next week and a half until the Fed meeting that really should sway the markets or make a huge volatility in the markets one way or another. Again, watch the tariff news. That'll tell you what's good the markets are going to do. So that's it for today's report, folks. Mortgage rates are down just a tad today. My name is Dan Frio. I have a slogan: one application, one credit pool. You're going to shop your loan over 30 different lenders. Now, Let me explain that to you. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer, licensed in all 50 states as well as Puerto Rico. So nowhere out there in the country, you should be able to use my services. I've been doing this for over 35 years. Love to put my expertise and my knowledge to work for you guys. If you're looking to buy or sell or buy or refinance, love to help. So we have a slogan, like I told you. Here's how it works. You put in your application up through here. We're a federal bank, but we're also set up with 33, I think it is right now, 33 other lenders. Those are banks, lenders, credit unions. You can get access to their programs, their rates, right through my system. So we're not only going to shop you with our bank, we're going to shop you up to 33, 34 different lenders to make sure you get the most qualified rate quote back. If you already got a rate quote, here's what I need you to do. Scroll up here and it says loan estimate review right through here. Okay. Upload your loan estimate. If you got 2 of them, 3 of them, 4 of them, pick the best one. Make sure you call that lender and say, is this the best you can do? If they say yes, send me the loan estimate. If we can beat it by rates, fees, both of them, I hope you can move over to us, save some money, and we'll pick up the process right where they left off. So that's just one of the pieces of the puzzle that we can offer for you guys. If you're looking to buy, we have a program right now. Woo, it went away. We have a program with it'll give you up to $7,000 in down payment assistance right through here, and it's income-based driven. So check out that program right through there. And if you're looking to refinance at this time, check out the refinance button. It's pretty intriguing how this works. What you're going to do is you're going to put into the interest rate you're hoping to refinance at. As soon as that rate hits that number, I'll reach out to you. We'll get the paperwork started, get you locked in, get your savings started immediately. But other than that, folks, that is my report for the day. Mortgage rates, let's just stay there stagnant for the day. They're going to stay in the range probably about 6.75 to 6.875 within the next week. So if that's where you're at and you're looking to look at some numbers, base your payments on that rate. And if it's saving you some money on a refinance, give us a call. If that works for your purchase, give us a call as well. Thanks for watching, folks. Have a fantastic evening, and I hope to see you back here next week with a lot more data that we're going to figure out where these are going to go and what's next. Thanks for watching, folks. God bless. Have a fantastic weekend. See you next week. Bye-bye.